Emerging markets and the developing world has a significant challenge ahead of itself over the next 25 years or so, because most of our countries have committed themselves to net zero. However, if you look at the process of decarbonizing, there's a massive financing gap, meaning there's a huge investment flow that is required, and development banks have a critical role to play in that regard. So the new development bank, like all multilateral banks, World Bank, Asia Development Bank, Africa Development Bank, and so on, have a very particular role to play because we are focused on development impact. We can deploy more financing in this area because we are focused on long-term development impact objectives rather than short-term commercial returns. So in terms of finding the necessary financial resources, we're now looking at new financial instruments like transition bonds, for example, to raise fresh funding to increase the available pool of financing for this decarbonization effort.
Now, we were talking to John Orchard, the CEO of the OMFIF, just about an hour ago about transition bonds, and when you look at it, the slice of the pie with regards to global and sustainable green bonds, they have a very small slice of the pie, about $3.5 billion as compared to, say, $863 billion issued last year in terms of green and sustainable financing. Why do you think the take-up for transition bonds has been so slow, and why do you think it's more people should pay attention to this more than they actually are?
I think if you look at the entire green, social and sustainability-linked bond market, right, it evolved very slowly and then experienced exponential growth. The green bond market started way back in 2007 with very modest issuances by the World Bank, European Investment Bank, a number of other banks up until about 2012. Then for the next 10 years, you've seen more than $1.5 trillion of issuances. A similar pattern will emerge for the transition bonds. It's a new financial instrument. The financial markets need to become more comfortable with a new financial instrument, and it's going to scale as more and more issuances happen from the development banks. All of us, World Bank, European Investment Bank, Africa Development Bank, Asia Development Bank, all of us are now focused on increasing significantly the size and scope of sustainability-linked instruments, but specifically transition bonds.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.